The Dow Jones Industrial Average kept its foot on the gas pedal to start the week, as the blue chips climbed toward their seventh straight advance. After a flat opening, the Dow rose 42 points, or 0.3%, to 14,438 in afternoon trading. The blue chips are riding a six-session win streak and have closed each of the last four sessions at an all-time high. The Standard & Poor's 500 stock index added 3 points, or 0.2%, to 1554, while the Nasdaq Composite Index gained 1 point, or less than 0.1%, to 3245. Financial and healthcare stocks were the S&P 500's best performers. Boeing was the Dow's best performer after reports that the company is likely to seek approval from its board to sell a new version of its 777 jetliner as soon as next month. American Express rose 1.1%, while Merck Company gained 1%. With little in the way of U.S. economic data or earnings, stocks overcame a flat open on Monday and continued higher. Investors recalled Friday's better-than-expected February jobs report, which came in better than expected. The report did little to change the minds of investors that the Federal Reserve is likely to continue to support the economy with stimulus measures, which are widely credited for contributing to the rally in stocks. "We have all this cash sloshing around the capital system that is flooding to stocks. At this juncture, there's nothing in the short term that looks like it will cause the change in the Fed's policy," said Ken Anglica, chief economic strategist for Richmond, VA-based Capital Securities Management, which has about $3 billion under management. The Chicago Board Options Exchange Volatility Index flashed extreme calm as stocks continued to climb. The so-called fear gauge fell 6.6% to 11.76, its lowest level since April 2007. In Washington, the heads of the Senate and House budget committees will submit budget proposals this week that are expected to show the vast differences between the tax and spending policies of Democrats and Republicans. European markets traded broadly lower, with the Stoxx Europe 600 losing 0.1%, in the wake of Fitch Ratings' downgrade of Italy late on Friday. The ratings firm lowered Italy's credit rating by one notch to BBB+, 3 steps above junk territory, citing concerns over political uncertainty at a time of economic weakness. On Monday, data showed Italy's gross domestic product contracted 0.9% in the fourth quarter. Italy's FTSE MIB index slid 0.7%. Asian markets were mixed after data that showed industrial production and retail sales in China for the January and February period missed expectations. In addition, inflation in February rose 3.2% from January, the highest monthly increase since April 2012, sparking worries of potential monetary tightening. China's Shanghai Composite lost 0.4%. Japan's Nikkei stock average rallied 0.5% to a 4.5-year high. Crude oil futures slipped 0.2% to $91.73 a barrel, while gold futures added 0.2% to $1,579 each ounce. The yield on 10-year Treasury bonds ticked higher to 2.059% as prices fell. The dollar climbed to a 3.5-year high against the yen, but fell versus the euro. In corporate news, shares of NICS Sporting Goods fell 10% after the company reported quarterly results that fell short of analysts' expectations and gave a downbeat earnings forecast for the year. Dell rose 1.3% after agreeing to a confidentiality agreement with Icahn Enterprises, according to a statement from the investment firm. The agreement follows Carl Icahn, chairman of the firm, writing to Dell's board that he opposed the PC company's planned buyout by founder Michael Dell and Silver Lake Partners. Genworth was the biggest gainer among S&P 500 components, adding 6.7%, after an article in Barron's said the mortgage insurer's shares are undervalued.